How's it going, guys? My name is Ishan, and in this video we're going to be talking about the Chinese stock that ARK Invest has been loading up on. Not many people are talking about this company, but today we're going to be breaking down everything you need to know, including the one big risk to the stock. So stick around till the end because you do not want to miss any of the important details. Along with that, we're also going to be doing a quick technical analysis at the end where I outline the best places to enter the stock. So with that being said, make sure to drop a quick sub and let's clock in. So the stock we're talking about is Huya, and last week I took an initial starter position of 10 shares. This is a Chinese company that is the #1 player in the Chinese live streaming market. They work with esports event organizers as well as major game developers, and apart from live streaming for video games, they also stream things like talent shows, anime, and outdoor activities. They're essentially China's version of Twitch. Twitch, for those of you guys who do not know, is owned by Amazon and is North America's biggest live streaming service. And the reason that Huya is even so popular is because the Chinese government banned Twitch. And because of that, they have benefited with over 173 million active monthly users, which is actually more than Twitch's 140 million. And ARK Invest has capitalized on all of this. Like, they don't just hold Huya in one ETF, but actually two. Firstly, they own about 6.8 million shares of Huya in their ARK Innovation ETF. It means that they really believe this company is truly changing an industry and has massive potential. You know, ARK isn't always right and you can't just go off what they say, but it's definitely a big confidence booster to see Huya as part of their Innovation ETF. And then they also have the stock in their next generation FinTech ETF with 4.8 million shares and is their 23rd biggest position. So in total, they have roughly 11.6 million shares and a total of $250 million in the stock, which is crazy. And as we can see, they've been consistently adding it to their innovation ETF even as the stock has been falling. But now let's break down the financials and more about their business, and after we'll be jumping into the big risk as well, because I'm not gonna just pump up this company because ARK owns it. So the biggest way that Huya makes money is that they take a cut from sales of virtual gifts and items on this live streaming platform. Essentially, viewers purchase these items and gifts on their platform to help their favorite creators and support them, and Huya takes a cut of that revenue. And then the second way that they make money is through digital ads. So this model has worked out pretty well for them, as last quarter they had revenues of $414 million, which was up 24% year over year. Along with that, the company has actually been profitable for quite some time now, with EPS coming in at 15 cents a share. So solid growth, and unlike many other tech companies their size, they're actually profitable, and it's great to see. But apart from that, they also have an extremely healthy balance sheet. They have about $1.75 billion in total assets versus only $377 million in total liabilities. That's really good, and that basically means they're debt free and have plenty of cash to grow the company. So just based on these numbers alone is another reason why I invested in the company. They're the #1 players in China, and considering healthy growth and such healthy balance sheet, this company at only a $5 billion market cap is trading at really cheap levels of a 3.2 price to sales. You don't see many companies putting out these kinds of numbers, still growing in the mid-20s and still this cheaply valued. And so I think Huya has really big upside. As we're seeing, esports is growing rapidly, with the market literally doubling in just the next 3 years. And citing data from iResearch, Bloomberg says that China's game streaming market was estimated to generate $3.5 billion in revenue for 2020. And Huya's total revenue for the year was about $1.5 billion, or 40% of that pie. China also reported over $10 billion in esports game profits for the first half of 2020, growing at 54% year over year. And with all of this, streaming of video games is just going to continue to keep growing, and I like that Huya has actually diversified their business to cover other things like talent shows and all that kind of stuff. But the biggest thing which I think that can make them a whole lot of more money is through subscriptions. With Twitch, you can actually support creators by subscribing to them, but when you do, you pay a monthly fee to that creator, and the three tiers are priced at $9.99, $24.99, and also a $4.99 a month tier. Currently, Huya doesn't implement this, but if they do, which I think just makes sense going down the road, it could bring in huge revenues and really explode their growth even further. But now let's talk about the big risk, which is scrutiny from the Chinese government. Huya actually announced that they were merging with their competitor Doyu, who I actually bought 90 shares of last week as well. Doyu is the second biggest live streaming company in China, and this merger was being mediated by Tencent, who owns stakes in both companies. Tencent has also agreed to assign its interest in its Penguin esports live streaming business for $500 million, effectively creating a three-way merger that will be an industry behemoth with approximately 300 million monthly active users at the end of the merger. So this merger is insane and will really crush all the competition. Both Doyu and Huya combined hold 80% of the share of the market and would essentially have zero competition. But after the whole Alibaba situation and Ant Group drama, this merger has come under scrutiny, and regulators say that they're taking a closer look at the deal. So this has been the reason why both companies' stocks have been in decline. And if this merger is shut down, it will definitely pose a big risk for the stock, and Huya will go back to having to compete with Doyu. But if this deal does go through, then you definitely want to be holding on to this stock. It's pretty uncertain right now, and you're kind of gambling on the fact that it does go through, but even if it doesn't, this is still a company with very strong fundamentals. As for a quick technical analysis, we found support at the $18 level and have broken out of the downtrend. We were forming lower lows and lower highs for quite some time now, but the stock has changed direction, and I'm confident that we've bottomed. This breakout and formation of new higher highs and higher lows is extremely bullish. We have support at $18, which would be a really good place to enter, and resistance at 21 where it's right now. But if we can break above $21, I could easily see the stock heading back up to the mid 20s. So the best place to enter the stock is either at $18 or on the breakout above 21. And with that being said, if you want to learn technical analysis and how I've helped so many of you guys nail the bottom on many stocks, make sure to check out the Gen Z Trader Academy link down below to learn something new and also support the channel. So guys, make sure you like, subscribe, and let me know down below what you guys think about Huya stock, whether you plan to buy. I mean, ARK has been loading up in the stock and I see extreme great potential. So do all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.